In this video, I will discuss an annual portfolio review in 6 easy steps. Coming up. Hey, what's up? Tim with Quantum Finance, bringing you the best investments and helping you make most of your money and outlive your lifestyle. On this show, I do a lot of business news along with strategies and stocks, just like this one. So if you're new here, think about subscribing. Elon Musk said, when something is important enough, you do it even if the odds are not in your favor. It's been an odd year for investors so far. Interest rates worries, the stock market and bonds rolling down. Then in October came the tariff wars with the US and China. And then the stock market started tumbling down 7% that month. Certain market sectors such as technology and energy have fallen the worst, and still the volatility has come back to visit us once again. Just like the dot-com era in 1999 and 2000, and just like the mortgage bubble in 2008 and 2009. If you're a disciplined investor who has been spooked by the recent market volatility, you can use an annual portfolio review. This can potentially help you make most changes with a well thought out plan. Have a plan like an inverted pyramid, with most important jobs at the top and the least important ones at the bottom. That way, if you run out of time and need to give something a short, swift kick in the ass, you have attended to the most important things first. Here are the steps to take. Number 1. Conduct a wellness check. Begin your portfolio checkup by answering the questions. How am I doing on my progress to my goals? That means checking up whether your current portfolio balances, combined with the savings rate, puts you on track to reach your goals. Tally up your various contributions in all accounts. So in 2018, a good baseline savings rate is 15%, but higher incomers want to aim for 20%. Higher earners need to supply more in their retirement cash flow and also have more room in their budget to target a higher savings rate. You need to aim higher than just a retirement, such as college funds for children or for a home, if that's what you need to save for higher things. If you're retiring, the key plan is your withdrawal rate. Divide your portfolio balance at the beginning of the year. Withdrawal rates will be apparent. Guidelines are 4% rule. Remember, 4% guidelines isn't about taking 4% at your portfolio year in the year out. All in all, retirement calculators can be useful plans. With tools like TD Price, Retirement Income Calculators, and Vanguard's Retirement Nest Egg Calculator. This will bring and help you identify areas of importance. Number 2, your asset allocations. Once you've found the heart of your plan, turn your attention to the accurate portfolio you have. These are good tools that Morningstar called Instant X-Ray Tool. Provides a look at your total portfolio, mix of stocks, bonds, and cash. This tool can also help with a benchmark process as well. With the tough sliding in the stock market in 2018, many investors' portfolio area are still heavy in the equities. That is not a huge deal for young investors. But the more significant investors which have only 10 years or less to retire. With 10 years or less, de-risking by shifting more to bonds and cash is more urgent. can make adjustments gradually with dollar cost averaging approach. You can sense shifting more once in safer assets. Number 3, check levels of liquid reserve cash. Your year-end portfolio reviews is a good time to check your liquid reserve known as cash. If you're still working, hold at least 6 to 8 months worth of living expenses in cash is essential. Higher income need to look at a year or more of living expenses in cash. For retirement people, 6 months to 2 years worth of portfolio withdrawals in cash investments. Liquid reserves can also provide a spending cushion even if stocks head south or bonds tank. The good thing of rising interest rates is that cash yields have gone up to 2% in a cash savings account. If you're settling for less than 2% in a savings account, you're leaving money on the table, which is not good for you. Online savings accounts are the highest yield FDIC insured. This offers you convenience of having cash side by side with your investments. Number 4, allocation and troubleshooting portfolio risk level factors. The past few years, value stocks perform was in line with growth names, while smart cap returns were in line with large caps. Not so much from 2017 and now in 2018. Checking your portfolio sector positioning will ensure you are in the mix allocated areas you should be in. The blind side review those as well, that your bonds will help deliver great returns that you need. In 2018, higher and short intermediate term bonds have done good, even as longer term and more Pacific bond types like emerging market bonds. Redeploying money from higher risk bonds into lower risk like short and intermediate term funds will improve your portfolio diversification and risk levels. Number 5, review your holdings. Additional checking of allocations and sub-allocations take a closer look at individual holdings. If you're doing your own due diligence, be on the alert for red flags at the holding level. For funds, red flags include manager and strategic changes and underperformance to cheap index funds. Heavier stocks or sector bets. For stocks, red flags include higher valuations and negative trends. Number 6, attend to taxes. Some of the related to-dos. Review how much contribution each tax shelter account types you are available to you. IRAs, company retirement plans, health savings accounts. Contribution levels to the 401ks, 403bs, and the 457 plans be increased in 2019 to $19,000 for workers under 50 and $25,000 for workers who are 50 plus. The IRA contribution limits is also going up to $6,000 for investors under 50 and $7,000 for investors over 50 plus. In addition to retirees must take required minimum distribution from tax deferred accounts such as 401ks and 403bs before year end. The age you must take these RMBs or minimum distributions are 70 and a half years of age. When markets come in increasing opportunities of tax law selling, especially in foreign stocks, and funds are energy and natural gas resources such as precious metals, stocks, and funds. Can also use those losses to offer great gains and positions of your portfolio. Please leave a smash like button if you enjoyed this video today. And please leave suggestions and comments down below. Thank you very much for watching my video today. So if you're new here, think about subscribing. Until next video, I will see you later.